Hello and welcome to Big Deal. Now remember, since its inception a few years back, well, the infrastructure trusts have raised funds worth over ₹1 lakh crore. Now these InvITs are mostly in the infra segments of roads, renewables and telecom infra assets. Now InvITs have given a huge lift to the capital-intensive sector and cash-starved infrastructure sector. Now, lack of long-term funding solutions, equity markets, tepid interest gave way to an asset class which is now fast expanding. To talk about its potential as well as the future trends, I am joined by a panel of experts well entrenched in the space of InvITs. Now, let me welcome on the show Suraj Krishnaswamy from Axis Capital. He's right here with me in the studio. Now, we also have on the panel Suresh Goyal of NHAI InvIT and Pratik Agarwal of Sterlite Power. Thank you so much, gentlemen, for joining us right here on CNBC TV18. Now, Suresh, starting with you, how big is the potential? Maximum of the InvITs really listed or in the unlisted space are from the road space. How do you see the potential and the growth opportunity?
That's an interesting question, Nisha. Thank you. So first of all, thank you for inviting me to speak with such esteemed panelists. I think the words were there embedded in your opening remarks that infrastructure is the core to the country's growth. It's a capital-intensive sector and requires capital and smart ways of raising capital to fuel that growth as we go forward. Now, the country has done a great job in building out new infrastructure, whether it's national highways, transmission line, power plants, airports, gas pipelines, telecom towers, and you name it. But we also seen that the capital flow into build out of new infrastructure has been constrained. So ideally, we would like to see the assets being built to be recycling their capital, and then that capital goes back into building out of new infrastructure. I don't have the numbers at the top of my head with regard to the size, what it could be, but only thing I can tell you is where I sit in terms of infrastructure, roads infrastructure. We have about 1/4 of total investments done in the country in infrastructure is being done in the roads. Now, that is a huge number. And this requires to be funded as we go forward. And more importantly, through the InvIT route, we are able to tap into a very large and growing pool of savings which exists in the country today, which is pension funds, insurance companies, the financial savings of the investors, etc., which is long-term in nature, which is relatively risk-averse, and that can be channelized. So I think those will be my opening remarks. And of course, I'll add to it as we go forward.
That's right. And you mentioned about how it really capitalizes the sector and lets the developers focus on the development and not be really, struggling with the capital requirements of infrastructure development. And that's something that Pratik Agarwal has also done very effectively. And hopefully, Pratik, in the future also, you are going to look at this particular opportunity. How do you see this from the point of view of a developer, a complete lease of life as well as capital requirement for this space?
No, that's firstly, once again, thanks for having me here, Nisha. And like Suresh said, see, if I just go back 7-8 years, it's very, very difficult for infrastructure developers in India to raise capital at the development company level, because taking greenfield risk is not something that a large part of foreign investors or domestic investors are comfortable with. And that's why if you go back to 2010-11, many of the large infrastructure developers that existed on that day, 70-80% of them don't even exist today because of this very reason. Now, what the InvITs did, and we're very, very proud to bring the first power sector InvIT to the country and go through the entire process with the regulator and make it successful. What InvITs did is effectively allow you to recycle capital. So a developer can do what he does best, bring in projects from paper stage to commissioning stage, and then offload that into this instrument, which can then recycle that capital. And I think it has done exceedingly well, with which tens of thousands of crores of assets are now in this in these vehicles. And as we look forward, India, just in the power sector, will spend about 20 lakh crores in generation and about 5 lakh crores in transmission. That's
Right.
the amount of development that's needed in the next 8 to 9 years alone. And therefore, InvITs provide this amazing vehicle by which, in a safe way, developers can put those assets into different vehicles, recycle their capital, and then make sure that this 25 lakh crore gets built in the next 7-8 years.
Right. So these are some big numbers, and given the infrastructure push by the government also, there is a huge requirement. And of course, infrastructure is here to grow. And also investors are looking at this space with a different lens now, the investors who earlier didn't participate. So Suraj, you agree with that? That more and more investors are now getting attracted to this particular sector. Yes. What are the emerging trends? You have taken a lot of companies the InvIT way. What are you really advising your clients now?
See, what's happened is more and more investors are looking at InvITs now. It's a far more mature product than when Pratik got his IPO way back 6 years back.
Right.
What we are seeing is more and more investor classes are coming into this product. We are seeing corporate treasuries, mutual funds, insurance companies, bank treasuries, everyone coming in.
Yeah.
Irrespective of the interest rate cycle, because you do not have a product where you can lock in a double-digit return for more than 20-25 years. That does not exist another product better than InvIT.
Yes.
And people are also willing to look at more riskier assets also now at this point of time. So my sense is more and more capital is going to get allocated to InvITs, and we are also going to expect more riskier assets to come in in InvIT form in the near term.
So what do you mean by more riskier assets? So far, we have seen a little bit of data, digital, fiber, and some telecom tower is a big one. And on the other hand, mostly roads and renewables. What else is going to come into the market in terms of pipeline for InvIT?
So it started with roads and transmission. That's how we started it in 2017-18.
Yes.
But what we are seeing is, initially it was more NHAI or SECI, NTPC kind of assets, the counterparty. Then we are seeing riskier state electricity boards as counterparties. Those assets are coming into InvIT. What we are expecting is CNI and wind energy, where the PLFs are variable. We are expecting those kinds of assets to come in very soon. We also expect warehousing has started. Warehousing InvITs, 2 of them have done. Another InvIT is in the way. So we're seeing warehousing. Data centers, while we have had fiber InvITs, we're expecting data center InvITs because the cash flows are stable. So you expect all these kinds of assets to come in.
Right.
I wouldn't be surprised if we were to have, say, something like a thermal InvIT coming into the market very soon.
All right. So now you've mentioned pretty much every pocket of infrastructure, and there is investor appetite as well for each one of them. For thermal, that will be something to watch out for. What do you have to say on this one, Pratik? You have been working on energy transition to renewable, and that's a new company also that you have set up, and you're focusing on that. In your renewables basket, again, that's also a large bouquet. Where do you see more investor interest, and are you seeing more appetite for InvITs?
Points there. Firstly, Suraj rightly said that it's time for the investor to accept higher risk asset classes into the InvIT, and I totally agree with him. He mentioned CNI. So just to introduce, we've launched Serentica Renewables a few years ago, and we're currently building 4 gigawatts of around-the-clock renewable power, directly selling to large, hard-to-abate industries like aluminum smelters, zinc smelters, and eventually steel and cement companies. And the idea here is that 40% of Indian demand, which is currently catered by the CNI sector, how do we decarbonize that sector and bring them onto renewables? Now, to your point about InvIT versus other options, right? So let's understand the way InvITs are designed in India. You have a mandatory payout of whatever cash flow you earn, and therefore the cash can't be reinvested. So fundamentally, it's a fixed income product.
And it's also annuity-like, kind of returns is something that has attracted a very different kind of investors in this space. We are not getting into that, Pratik, but is there a differentiation of investor appetite in this asset class from wind to solar to hydro to others?
I don't think so. I think investors, if they see the basic nature of the annuity cash flow, and if they're fundamentally looking for long-term stable yield, they will look at all those cash flows. I think you will find interest across the board. The only question one can ask is that InvITs versus IPO. We can come to that if you like.
Yes, we will definitely, and that's something that I'm very interested in. But Suresh, first on roads. India needs more roads. Government is giving a push towards that. Are you going to take advantage of that? And one critical point in your area is also the toll risk. How is the investor community understanding that bit?
See, maybe I'm a bit biased, but I do think that in the Indian infrastructure space, roads provide the best segment for a long-term investor to invest into. And the reasons are primarily three. Number one, roads have a very high degree of, road traffic has got a very high degree of correlation to the GDP. And we all believe, and the world over, we all believe that the Indian GDP is likely to have a sustained growth for decades to come. So there is an inbuilt demand escalation that is there in the traffic on the roads. Number two, and which is perhaps the most critical point, is that across the various infrastructure segments that my esteemed panelists spoke about, the fact is that we live in a world in which the interest rates are going to be staying higher for longer. In that case, the asset class that allows you to have inflation to pass through without going back to the regulator or wanting adjustments done to your tariffs or something similar, or having fixed tariffs for the life, right, is the road sector. Why? Because the roads provide the tariff in which there's an automatic escalation or automatic change that happens every year based on a set formula. So if the inflation is high, that means the tariff goes high. As a user, one does feel the pinch, but as an investor, it's a great hedge. And number three, as far as the road sector is concerned, is that the contractual frameworks underpinning all these concessions, whether with my InvIT or in the TOT, the BOTs, et cetera, have been fairly stable. None of the changes ever announced by NHAI have been retrospective, and all have been prospective, and the previous changes have been grandfathered. Now, if you look at it just purely from this perspective, and just say that if I'm a investment manager or a CIO or a treasury manager or an individual investor, then it just starts to make it very, very attractive. I think the point I would like to make to both the panelists, when we're speaking about other asset classes coming into the InvITs, is that as responsible fund managers, asset managers, promoters, merchant bankers, it's also our responsibility to ensure that the contractual frameworks underpinning these asset classes that we are bringing to the market continue to uphold for a long periods of time, 10, 20, 30 years or so. Because relatively, the InvITs are a young product at this point in time from the Indian market. Yes. The domestic market, the domestic investors are just coming in as we speak.
Yes.
And we really do not want a situation in which, for whatever reason, people burn their fingers and we throw the baby with the bathwater. That means the product gets damaged. So I'll take a pause here. Happy to take more questions on this.
No, very valuable points there. And of course, this particular asset class is just about being understood and growing. Some of the global investors and more annuity return kind of investors are the ones who have shown interest, but probably that particular investor base is expanding, and maybe it will move on to the retail investors also in a more robust manner. We'll discuss more about InvITs and also InvITs versus infrastructure IPOs. Will infrastructure IPOs make a comeback, and how both these asset classes, if pitted against each other, how will they fare? We'll talk more about that when we return after a very short break on Big Deal. Stay tuned.